All right, Trump just teased the Great American Mortgage Corporation, and there's already rumors swirling that it could involve both Fannie Mae and Freddie Mac. Now, are they actually going to merge, and is that going to lower your mortgage rate, and would it pump homeowners' equity? Let's separate hype and get into some of the mechanics of this. So Trump posted an AI-style image on Truth Social saying MAGA-listed New York Stock Exchange, November 2025, with a corporation we've never heard of, which is a Great American Mortgage Corporation. Let's call it GAMC. Is it too early? Can we call it that? I like the way that sounds. So where do you have multiple outlets like Axios saying that the administration is exploring public listings for both Fannie Mae and Freddie Mac in an IPO, and we have multiple Wall Street firms kicking the tires. It's a lot of rumors right now, so we don't have all the details, but we're gonna do the best we can here. And you might be thinking to yourself, wait, I thought I can already buy Fannie Mae and Freddie Mac on the stock market. Yes, you can. Currently, they're listed OTC or over the counter. And if you remember the movie Wolf of Wall Street, that's the pink sheets. So they're listed on the pink sheets already. What happened was back in 2010, the FHFA, or Federal Housing Finance Agency, ordered them to be delisted from the New York Stock Exchange. And now we're talking about putting them back on the New York Stock Exchange. And the FHFA is important to our story here, so remember that. It's going to come up later on here. So just a quick history on Fannie Mae and the other government-sponsored entities, or GSEs. Fannie Mae provides liquidity in the market and was formed in 1938. Basically, they buy loans from banks and lenders so they can take those off their books and make more loans. They provide liquidity in the markets. In 1968, the government split off Ginnie Mae from Fannie Mae, and Ginnie Mae is the one that explicitly guarantees VA loans. At the same time, Fannie Mae became a shareholder-owned, government-sponsored entity with an implied government backstop. And then in 1970, you had Freddie Mac come along, which is very similar to Fannie Mae, but they were introduced to expand the housing and conventional mortgage market. And there's always been kind of a lot of questions like, are these private companies? Are they government institutions? And that became much more shifted towards the government side in 2008 when they were both put under conservatorship by the FHFA. In 2019, the FHFA launched the Uniform Mortgage-Backed Securities, where Fannie Mae and Freddie Mac basically issued one fungible security that investors could buy. Lately, you've seen a ton of pressure being applied to the Fed and Jerome Powell to get interest rates down, and that's especially coming from the FHFA's director, Bill Pulte. And I don't know if you follow him on Twitter, but it's pretty entertaining. He's almost like Trump's attack dog. He's coming at Powell every single day with these really crazy tweets. You should give him a follow if you're not already checking him out. So are they going to combine Fannie Mae and Freddie Mac under the one umbrella of the Great American Mortgage Corporation, or GAMC? It's possible, but it's hard. As a 10-year vet in the mortgage industry, I think it would actually kind of make a lot of sense because they're basically doing the same thing, Fannie Mae and Freddie Mac. They have very similar guidelines. You might see little nuances, like if somebody has a student loan, one takes 0.5% of the principal balance, one takes 1%. I think they could come up with some sort of merged guidelines, like let's call it 0.75%, and just have one agency. There's a lot of redundancy, and it's not very efficient having kind of two agencies doing the same thing, in my opinion. However, you're dealing with two congressionally chartered government-sponsored entities that are under conservatorship. So there's a lot of things on the back end that would need to happen. The Treasury has warrants and preferred warrants for each agency. You'd have to preserve the fungibility of the unified mortgage-backed securities, and there'd be a lot of capital allocations involved as well. That's all above my pay grade, but it's not as easy as it sounds. You do have some influential investors out there calling for a merger, arguing that it would reduce duplication, like I was saying, and it could tighten spreads. So we'll see how that plays out. So let's take a look at two possible paths. There's one that's more likely in the consensus opinion on what this is going to look like, and then there's one more kind of fun wild card option I'm going to look at with you guys. So the first path, and the more likely path, we'll call it the incremental path, would be issuing some new shares to increase the float, maybe around 5 to 15%, while keeping FHFA control. That would probably be accompanied by some heavy government messaging saying that the implied backstop or guarantee remains in place, demand higher yields on mortgage-backed securities, which would mean higher interest rates. They'd probably have some small pricing tweaks, like maybe reducing the G fees and loan level pricing adjusters, so we could see some small improvements in mortgage pricing. That would keep the UMBS and the TBA market intact. We might see somewhere in the 10 to 15 basis point improvement in pricing, which is not going to change anybody's life, but it would be a welcome reduction. So the second option, the wild card option, would be rolling Fannie Mae and Freddie Mac together under this new umbrella banner of the Great American Mortgage Corporation. If investors believe that the secondary market in this case is going to remain viable, you could see spreads tighten and rates go down. But if investors start to question the execution of this, the mechanics, how it's going to work, or if it becomes overly political, that could spook investors, which would jack up mortgage rates basically. And then something else we could see here, which would be kind of crazy, is if they begin offering an explicit government backstop, similar to how you have on VA loans right now. If they did something similar like that on Fannie Mae and Freddie Mac, I don't even know what the reaction would be, but I do think rates would probably go down a little bit if they did that. That would be a pretty wild situation, but let's see if it happens. So let's say this all works out and Trump and the administration are successfully able to bring down mortgage rates. Who's going to benefit more from this? Is it going to be the people that already own houses, or is it going to be the first-time buyers out there and people that are hoping to get in the housing market? So this is a little counterintuitive, but I think it'd be better for first-time house buyers, your Gen A, your Gen Z, if rates stayed high and prices came down eventually. If they do drop rates, we've seen this play out before, equity gets juiced up and people that already own assets and real estate are the beneficiaries. If prices continue to go up, it's going to be that much harder for Gen A, Gen Z, and first-time home buyers to come up with a down payment and be able to get into these homes at higher prices. So I kind of almost hope that rates stay high so we can have a more balanced and fair housing market where younger buyers have a chance to get in there and start the American dream. So my take on this, the branding's very loud, but I think it could be one of those situations where it's all bark and minimal bite. I think that more conservative incremental path that we talked about that's going to preserve the MBS market and the TBA market is the most plausible near term. The grand GAMC merger, well, it's fun to think about. It's kind of a moonshot. There's a lot of legal hurdles that would have to be passed, and there's a lot of major market plumbing risk that I don't think a lot of these politicians are going to want to take on. So if your plans are depending on a big, fast rate drop from all this, I'd start building a plan B. Thank you.